It's good afternoon, happy Sunday to you all from Nigeria. For those of you watching from any part of the world, I greet you all. Thank you guys for your support so far. For all my subscribers, I say salute to you all. Thank you for your encouragement. Thank you for your support. Thank you for your likes. Thank you for your sharing. I really appreciate you all. Thank you very much. So today guys, today is going to be a wonderful day because I'm going to be teaching you guys on how you can trade futures trading on Binance. Okay, a lot of you have been asking me, okay, sir, when are you going to do a video on how to trade futures on Binance? Sir, I don't know how to trade futures on Binance. Do you have any class I can pay for to learn futures trading on Binance? So today guys, I'm going to be doing this for free. Okay, you are not paying anything. Okay, we have seen many cases where people pay people to learn how to trade futures. Okay, but today guys, I'm just going to be giving you guys a beginner's guide on how to trade futures trading on Binance. Okay, so that whenever you get signals from your friend or anywhere or any group you belong to, you can be able to pick those signals and use it to trade on Binance. So guys, if this is your first time coming across my channel, please do what to hit the subscribe button and most importantly the notification bell. All right, so you get notified whenever I do a new video on my YouTube channel in regards to business reviews, ways to make money online, trading, and lots more. Okay guys, so let's begin. Please watch this video to the end because I have a wonderful offer for those of you who want to be getting signals on futures trading. I have an offer for you, so do well to watch this video to the very end not to miss the offer. Okay guys, so let's begin. So for those of you who wants to trade futures trading, you first thing you need to do is to have a Binance account. Make sure your Binance is fully verified. Okay, verify your Binance using your bank verification number, which is BVN, your ID card. For those of you watching from any part of the world, you can verify your Binance using any means. If you don't have a Binance account, I will leave the link in the description below so you can register your Binance account and join us in making money in the trading industry. So once your account is done, the next thing you need to do is to fund your Binance account, okay, with any amount of USDT, 10, 15, 20, depending on your capacity. All right, fund your Binance account using your spot wallet. Okay, so this is my spot wallet. You can see I have 232 USDT on my Binance account. All right, I have it. Okay, so now once your Binance account has been funded, the next thing you need to do is to click on the futures trading. Okay, this is it. Click on the futures trading. All right, so when you click on it, it will take you to this section. All right, so the next step you need to do is to move your funds from your spot wallet to your trading wallet. Okay, you need to move your funds from your spot wallet to your trading wallet so you can be able to trade futures. So to do that, all you need to do is to click on this section. You can see this section, this arrow here. You click on it. Okay, so it will take you here, so you can see your balance. You can see available balance. I have $232 on my spot wallet. So all I need to do is to put the amount of USDT I want to move to my futures wallet. So you click on confirm. So you can see it very clear. You can see $100 in my wallet. So once this is done, you are good to go. All right, so I'm going to be explaining to you what all this section is. The first thing we are going to be talking about is the isolated and cross margin, the margin mode. They will talk about the leverage. They will talk about how to place a trade on buy and how to place a trade on sell. I'm going to be explaining this. Okay, so I'm also going to be explaining what the market limit and what the limit order means and what the market order means. I'm going to be explaining it to you so you guys can be able to understand. Okay, so like I said, this is a beginner's guide. Okay, if you want more advanced teaching, that would be a one-on-one personal mentorship with me and you, but it's not free. Okay, so make sure you take advantage of this video so you understand the basic concept of futures trading. Okay, but for those of you who will be coming here for the first time, you will be asked some few questions from Binance in regards to trading. It is a very easy question. You can those questions is something that is easy. They will ask you what is the max leverage, what is just few easy questions. You can even browse them on your Google to get the answer. So once you are done answering those questions, you'll be brought up to this page. So now let's explain what the margin means. Okay, when you click on this isolated, you will see cross margin and the isolated margin. So let me explain this in the simple terms. If you are dealing with the cross margin, which is this. If you are dealing with the cross margin, you can see the explanation. It says switching of margin mode only applies to selected contract. Then you can see what are cross and isolated margin. So when you click on it, you will see the explanation. Okay, I don't have enough time to go through it, but you can read it all yourself. But I'm just going to explain it to you in the language you will understand because of this video, so that it will not be too long. So what cross margin means is that whenever you pick a trade, for instance, I have $100 here, and I pick a trade using cross margin with $50. What cross margin does is that if my trade is going against me, in order for the trade to be sustained, okay, in order for the trade to be sustained, not to get liquidated on time, what cross margin will do is that cross margin will be collecting extra money from my leftover balance. For instance, I use $50 to pick a trade and I have $50 left. If my trade is maybe going against me, in order to secure more liquidation price for me so that my trade will not get liquidated and I lose all my money, cross margin will be collecting money from my remaining balance. Okay, if you are using $50 to trade, you need to have $50 remaining in your balance here, but you start seeing that your balance will start reducing, $48, $45. That is because cross margin is collecting from your leftover balance to sustain the trade. That is what cross margin is. So most people who use cross margin to trade are people who want to hold trade for long, so that in case the trade goes against them, their balance will be able to sustain the trade for a very long time. Okay, why? If you are dealing on the isolated margin, which is this is called, this is isolated. Isolated margin means, you all know what isolate means, a separate thing, one thing that is being kept in a particular place that is separated from every other thing. So if you are dealing with isolated trading, what you are eventually saying is that the trading should not use more than what you have given it to use. If you are using $50 to trade, the trading is only going to be using that $50. It's not going to tamper with your balance. Okay, if I'm using $50 to trade, that is the only money that is going to be on the trade. Whether the trading is going against me or not, my money still remains $50. So cross margin will only temper with your leftover balance. Okay, so if you are trading on cross margin on isolated, some people will be like, I used $100 to enter a trade, but why is my remaining balance now reducing? I left $50 behind, and now I'm not seeing $30. Where is the remaining $20? That is because you are using cross margin. Cross margin will always collect from your balance to hold your trade. Okay, so if you don't want that, you can make use of the isolated margin, which I recommend new users to always make use of. Isolated. All right, so let me quickly rush. So the next one we are going to be talking about is the leverage. Now this leverage is your risk management. For those of you trading forex, there's what we call lot size. In forex, you have 1 lot size, 2 lot size, 3 lot size, 0.5 lot size. That is your risk level. Okay, that is what it also implies on futures trading. Leveraging simply is your risk level. The higher your leverage, the higher your risk level. The lower your leverage, the lower your risk level. Okay, so if you want to make money faster, if you want to earn faster, depending on how the market moves, you use a high leverage. If you want to earn little by little, you use a very lower leverage. But if the market goes against you, it is the reverse case. If you are using a high leverage, you may likely lose your money at an instance. But if you are using a very low leverage, there is a long probability for you not to lose all your money at an instant, no matter the dip, because while you are using a very low leverage. Okay, for newbies, I recommend using 5x, 3x, 10, maximum 10x for newbies. For we who are already professional traders, as God is helping us, we make use of the highest leverage, 25x. Each coin has their leverage. Okay, each coin. If I check Bitcoin Cash, you can see it has up to 75x. This is because of the liquidity that is available in that particular coin. While on this particular coin, you can see that it has just up to 25x. All right, so that is what leverage simply means. your risk level. Okay, so what this simply means, this limit, you can see limit here, you can see limit order, market order. So the main important thing you should know here is the limit order and the market order. This is simple. The market order simply means you want to place a trade based on the current market price. That is what we call CMP, current market price. Okay, for instance, a signal is being dropped and they ask you enter with CMP. It simply means enter with the current market price. All right, sorry for that. Some calls just came through on my WhatsApp. So that is what it means. CMP means current market price. So if you want to place a trade based on your own entry, that is when we make use of the limit order. So on the limit order, you have an opportunity to edit the price you want to go into the market. You understand? So that is the difference between market order and limit order. All right, so then as for the price, okay, as for the amount, after imputing your limit order price, if you want to go into a trade, for instance, all you need to do is to use limit order based on the signal you are being given. Use the limit order. Then on this section on how to implement your price, many of you are making these mistakes. If you want to trade with, for instance, $100, you're going to be putting 100 here. That is not how it is being done. If you put 100 here, okay, if you put $100 here, you will see that this is the initial price you are using to trade. Cost $3. You see, so if you want the easiest way to detect what you want to use to trade is to make use of this arrow. You can see this arrow, you hold it, then you draw it to whatever point you want to draw it to. So as you are drawing it, be monitoring the cost price. The cost price is your initial trading capital you are using. So let's do a live example. You can see it. You can see the way it is moving. If I want to trade with 100% of my capital, I put it on 100%. If I want to trade with 50%, I put it on 50%. Do you see it? So if I put 100%, it means I'm using my whole balance to trade. You can see it here, $99.99. Okay, so I'm going to place a live trade to show you how to pick a trade. So for instance, a signal is being dropped on COM. Okay, when a signal is being dropped, this is how you search the coin. Okay, you just click on this area here. Okay, you click on it, you can be able to search the name of the coin. If they ask you to trade on Dogecoin, you search on Doge. All right, Dogecoin, you can see Dogecoin/USDT. If they ask you to trade on BTC, you search BTC. You can see it here, BTC USDT Perpetua. If they ask you to trade on LTC, sorry, all right, sorry guys, these people are just disturbing me with their calls. Okay, so if they ask you to trade on LTC, you search on LTC. So you can see it, LTC, so you pick the coin. Okay, so let me trade on CMP/USDT. Okay, I've dropped few signals today on my group where people trade and they made a lot of profit. Okay, so when you search on the coin and you have implemented the coin, whatever signal that is being dropped, there is always an entry price. Okay, for instance, I drop a signal that on COMP, I want you to long it. Long means you are predicting that the price will go up. Short means you are saying the price will go down. So that is different between long and short. So if you want to long any coin, you leave it on buy. If you want to go for short, you leave it on sell. So when you click on sell, you will see sell short. That means you are saying the coin is going to come down. If you are predicting that the coin is going to go up, you click on buy. That means the coin is going up depending on the signal. Okay, some signal will tell you short, some signal will tell you long. What they are eventually telling you is that come here and buy, come here and sell. Okay, so for instance, I want to enter this trade at 7.6, and I want to make use of 100%. I want to make use of the highest leverage, 25x. All right, so after you have imputed your amount you want to trade with and everything, okay, let me put it on 5. Then you click on buy long. You can see it, my trade just picked buy long. You can see it, you can see the profit that is already going. So your leverage determines your risk level. Okay, you can see it. I'm virtually I'm on $2 profit now. So this is just how to trade. So if you want to predict that the price will come down, you click on sell. and you also put the same signal based on where, depending on where you get your signal. Put the entry price, then select your amount you want to trade with. Then you click on sell short. Okay, buy and sell, buy and sell. So that is just it. So if you can eventually set your take profit and your stop loss. So after placing a trade, or before you place a trade, you can eventually set your TP mistake profit. You can see it here. This is it. TP mistake profit, stop loss. So you can put your take profit and you can put your stop loss. But if eventually you pick up a trade without setting your stop loss or take profit, all you need to do is to click on this section here. Click on this section, then you click on it. So once you are done, you will see TP and XL. Then you click on position TP and SL. When you click on it, you can be able to set your take profit and stop loss. So for instance, I want to take profit at when the coin hits 80 points, let's say $80.5. Okay, I want to take profit. Then I want to stop loss. I want my trade to close when the market goes to $75.5, which means I'm going to be losing $31, or $78.8, which means I'm going to be losing just $22 if the market dips to this level. So once you are done with the settings, you click on confirm. But for me, I don't trade with stop loss. Okay, I don't trade with stop loss because sometimes there are some coins, when they hit your stop loss, they will eventually go back and pump. So I don't trade with stop loss. I trade risky. You understand what I mean by risky? So once you are done with all your settings, you click on confirm, then your settings is being set up. You understand? So you can read your charts here. You can read your charts here and everything to see everything. Okay, so that is just it for today's video. So I'm leaving this trade because I know it will eventually come back. So I don't use stop loss to trade. But for instance, you are afraid, just like I said, always make use of stop loss and apply risk management. All right, depending on your capital, on your risk level. So that is just it. So which aspect am I not talking about? Okay, I think I have talked about all aspects. Okay, so that is for today's video on how to trade futures. Okay, all right, I have a group where I drop future signals. Okay, I have a group. So for those of you who are interested, I'm only going to be taking the first 5 persons. Okay, the group eventually costs $100 for the VIP group where I drop trading signals. But for the first 5 persons that will chat me up, I'll be collecting $60 from them. Okay, $60. For those of you who are in Nigeria, you can pay in whatever currency you want to pay. For those of you living outside Nigeria, you can pay in view Bitcoin, USDT, and any other cryptocurrency you can pay with. So that is it for the first 5 persons. Once the slot is filled up, the price goes back to $100. Okay, I have a group where I drop daily signals on futures trading, not just futures trading, also on forex trading. Okay, so we have Zoom meeting once in a while to shaping our skills about trading and so on. Okay, so that's for all for today, guys. So I hope this video has been helpful to teach you the basics of trading, futures trading. Okay, guys, so if this video not be helpful, please do well to like it, and most importantly, I want you guys to share it to people who don't know how to trade futures trading. Okay, it is very important so they learn as well. Okay, so if there's any questions you don't understand, you can chat me up. I'll be dropping the link to contact me on the description below via WhatsApp. You can chat me up in any area you don't understand. I will tell you and put you through. Okay, thank you guys for watching this video. If this video has been helpful, please do well to like. Thank you guys. To have a blessed day.